Well, first it was Silicon Valley Bank, then it was Signature Bank, then it was Credit Suisse yesterday over in Europe. Now the latest bank needing a rescue package is First Republic, a bank that specialises in lending to uber-rich tech entrepreneurs. Our business editor Ross Greenwood is here with me. What a week it's been, Ross. 4 banks. At what point do regulators and the banking industry stop saving these banks?
Well, not just yet, at least anyway, Pete, because overnight the biggest banks in America have come together to save this San Francisco-based bank. Now, it's an astonishing bank in its own right because, as you say, it does deal almost specifically with the uber-rich, many of the Silicon Valley entrepreneurs, clients. One noted client is Mark Zuckerberg, who'd taken out a $5 million mortgage for a house with them, which wasn't big in the whole scheme of things, but it just gives you a small indication of the client base. They were renowned for throwing significant parties, but now what's happened is JP Morgan Chase, you've got Bank of America, Citigroup, Wells Fargo, then you've got Goldman Sachs, Morgan Stanley, a range of other banks coming together to put in $30 billion to basically prop this bank up. As a result, the shares jumped 9% after they've plunged, as you can see here, pretty dramatically, almost 70% in the last little period of time. This is over 6 months. You can see just at the very end there when people started to look around after you'd had the Silicon Valley Bank collapse to see which was the next one that had problems. And this was the idea that First Republic was the problem, and so you can see what the consequence has been. They have jumped there. It'll just be interesting to see what happens in after-hours trading, because the fundamental problem is if it's not believed, then there's going to be some big issues there as well.
Yeah, and First Republic dropped 85% in the space of a week, even though it's recovered a little. You wouldn't want to own any shares in that one. Now, this all came after Credit Suisse yesterday, Ross, needing a bailout of a different kind. So what happened there?
Well, OK, so Credit Suisse is more significant, much more significant than First Republic or Silicon Valley Bank, because it is a globally, systemically important bank. In other words, it's one of those banks that's simply too big to fail. So the Swiss Banking Authority, its equivalent of our Reserve Bank, stepped in to provide it with around 50 billion Swiss francs, or around 81 billion Australian dollars. Now, in this particular case, you can see almost immediately what happened to its share price overnight. So there was a significant rebound in the share price of Credit Suisse overnight. Share price jumped around 19% off the back of this. But in the meantime, what you've also had is people talking out about the inevitability of trying to save Credit Suisse. Just have a listen here.
It's not likely that they're going to use it, but the fact that it gives the market confidence that, the government will not let the bank to fail, or they will intervene if the investors' panic persists. So I think this is a very effective way to kind of calm down the market. And I was glad to see today the bank's price rebound after the news has been released. So I think investors look at what has just released on Tuesday and think maybe this is not so bad based on what they have already known.
So that's 4 banks that have effectively been rescued. You don't say bailed out, because bailed out means that they've saved the shareholders and everybody else, but certainly bailed out to the impact that creditors are actually kept safe. The banks continue to exist for the time being, at least anyway. There is the price of the Credit Suisse shares. As a result of this, you can see jumping 19% on the rescue package. So, this is a bank that they just simply can't allow to go broke, because you'd seen the previous night shares in Deutsche Bank, Santander, you saw Banque Nationale de Paris, BNP, all of them fell really heavily because Credit Suisse will be connected to every one of those other European banks, and that's the fundamental problem.
Yeah, so integrated into the global banking system. You're right, Ross. Now, I noticed you yesterday talking about the noted economist Nouriel Roubini, known as Dr. Doom. He said Credit Suisse would collapse this weekend if the European Central Bank raised interest rates by 0.5%, which it exactly did overnight.
It did exactly that, so we'll find out. However, it would be fair to say to Dr. Doom that that statement occurred before the bailout come from the Swiss National Bank. But the central bank, the ECB, European Central Bank, did raise interest rates, as he told them not to do, by 0.5%. Now, this could lead to a guessing game. Still, the European Central Bank is trying to quell the inflation and therefore continued on its quest to do that, notwithstanding the problems in the bank banking industry right now. And as I say, many of those problems might pop up in Europe as distinct from some of these relatively small banks in the United States.
OK, so let's bring it home and finish here, Ross. What does these bank rescues and all the rest of it have to do here? Because, you know, you've got unemployment that was so strong, 3.5%, back to historically low levels now, which would normally lead to calls for more interest rate rises. But given global jitters, where does Philip Lowe settle?
Well, exactly. Almost scrambling a bit like that, going, where do we go with this? Because it is a very difficult situation, because you do want to beat inflation. There is no doubt you do not want that to hang about. He has said that many, many times. But on the other hand, what you also want to be conscious of, at least, is the global situation right now and not putting too much stress on your economy if these stresses already are showing. So here is the labour data yesterday, as you point out, at all-time lows. And really the aberration in January was because a lot of people were out sitting and waiting to find jobs or to start new jobs, whatever it might be. Many people also took a lot of January off. So 3.5%, 62,000 new jobs created. But the thing I want to show you is this, and this is the ASX RBA rate predictor. Now, during the course of this week, as these bank collapses occurred, it basically gave the chance of an interest rate rise in April at absolutely zero. But as a consequence, and you can see it here, for Wednesday and Thursday, it went to zero. Yesterday, after that unemployment rate came out, it jumped to 25%. So it's actually now hedging its bets, the money markets, that there is a slim chance that the Reserve Bank will raise rates again in April.
Interesting, yeah, 3.85. OK, Ross, there is so many moving parts there. Well explained, thank you. We will talk to you again.